Ever wondered what big players, the banks, the hedge funds and institutions are really doing in the forex market? What if I told you that there's a report that gives you a sneak peek into their trades each and every week? Sounds powerful, right? The Commitment of Traders report is one of the most underrated trading tools in the forex industry. But here's one thing, most traders don't know how to read it or they overcomplicate it. So in this video, I'm going to break it down in a simplified way so that you can apply it as well. All for you not to trade harder, but to trade smarter. I will show you spots when the big money is loading up on positions, as well as when trends are likely to reverse, and how you can use this information to get ahead of the retail crowd. So if you are ready to trade this, hit the like button and let's dive in. Alright, so I'm not going to waste much of your time. We're going to go straight into the content. The first step is to go on the website of cftc.gov, where you are going to find the Commitment of Traders report. All institutions, all large speculators in the US are forced or mandated by the law to submit information of their positioning in the markets onto the CFTC website. So they submit this information each and every Tuesday, and that information is available for the public on Friday. So after they actually publish that information, we can make use of that particular information. So for the meantime, or in short, what we want to look for is when institutions are buying a certain asset, we know that it will induce much more volatility on that particular asset. And when they buy something, it increases the demand of that asset. And when they sell something, it will decrease the demand of that particular asset. For instance, if we see euro has been dropping on all several pairs, showing that the positioning of retail traders is actually short on euro. So how do you find that information and make use of it? On the Commitment of Traders or the CFTC report, you are going to go under Market Data and Economic Analysis. You go to Commitment of Traders and then click. After that, you'll find a lot of information. This website actually carries a lot of stuff in terms or in line with trading of securities and so forth, commodities. So you are going to go to Current Legacy Reports. On Current Legacy Reports, you're going to go to Chicago Mercantile Exchange. So this is the basic principles or the origin of principles. We are going to use the real actual data that is submitted, not any refined data that you can find on several websites. So on Chicago Mercantile Exchange, you are going to look for short format. On short format, this is what comes up. A mumbo jumbo of numbers that is scary to a lot of people. This looks like a typewriter that actually wrote this stuff. All right, so how are we going to use this information? You can see that they are non-commercial, commercial, total, non-reportable positions. What we are interested in as retail traders is the non-commercial, which is basically the large speculators in the markets, and these large speculators will be reporting how they are actually speculating within the markets, whereas the commercial are those companies that will be actually buying and hedging their against some certain volatility that may come. For instance, if Microsoft has people in Japan, they may buy the yen earlier and store those yens, so that when the time comes, they'll be able to buy. So they need to report that we did this, unlike the speculators. The speculators trades like how we do. So on the non-commercial, that is where we want to be looking at. There is short, there's longs and shorts, right? So longs meaning the buys and shorts meaning the sells. That is the basic concept. And then there is the numbers that are below, right below each on longs and right below the shorts. So in this particular case, you can see this is USD Malaysian crude palm oil, right? So as traders, some of these assets, we do not trade them. So if you are on Windows, you just simply press Control, find Control F, and then you actually get this search tab. So it's Control F, and then we can actually search for the pair. For the currency. In actual fact, we do not talk of pairs on this particular, because they'll be buying a currency, not buying a pair. So euro, you can see that euro has been highlighted here. This is where the euro is. Non-commercial we can see that on the non-commercial side, the longs are 15,620, right? And then the shorts are 239, right? From this information, we can see that big institutions, they are long more than shorting on euro. It's euro as a currency. So from there, we can now see changes from the 21st of January 2025, right? That is now last week. We can see minus 3,305 on longs, meaning that they closed 3,305 longs and they added 146 shorts on euro. What does this tell us about this arrangement? It can actually inform us that large institutions are closing longs and they are opening shorts on euro. So that scenario is actually telling us that euro is likely to be reducing in value, meaning institutions are now favoring to buy euro, right? So if that is the case, if we go to the charts, we can now start to look for trades that are going against the euro, because that is what is being told by the Commitment of Traders report. So in the when I actually got this information in the past week, I actually short euro USD due to the fact of this particular thing. You can see that we had this particular rise to the upside, an M pattern, and we can see where the market is right now. Euro against USD, euro is being short by large institutions and they are closing longs on euro. So on euro USD, it will translate like in this particular way. So the trick here is to basically find what the institutions are doing. Are they closing longs, opening shorts, or they are opening shorts and closing longs? If that is the case, you now know what is taking place. And if that is the case, you now come to the charts, apply your strategy, having much more information behind what you are doing. So if we have another example on the CFTC website, Commitment of Traders, I'm going to look for JPY. So JPY, here is JPY, where is it? Right, so in this case, we can see that they are actually closing shorts minus 131 and opening longs plus 1,771, meaning JPY is strengthening. When we go to the charts, if I see you buying JPY, I would actually be surprised. You are supposed now to go on the charts, look for price action, or to look for the strategy opportunities that are in line with the Commitment of Traders report. So if we go to the charts, you can now see what happened on JPY. Last week, I actually made some shorts on Canadian against JPY. Why? Because on Canadian dollar, they were actually closing longs and opening shorts. Whilst on JPY, they were actually closing shorts and opening longs, meaning that the market will actually translate in this particular way. I understand that this might come as something that is difficult to understand, and for you to master, you can actually repeat the video over and over again up until you grasp the concept. On that note, we've come to the end of today's video. Thank you for watching, like and subscribe, and I'll see you in the next one.